there are very few things in this environment that I think will allow you to sidestep what's coming. Um, because they're all inversely correlated to a rise in interest rates. I mean, traditionally, when things got frightening, people would buy US treasuries. Well, even with the rise in interest rates right now, the US treasury on the 10-year note is 4%, with inflation at least double that. And if you were real about it and you look at the real CPI numbers the way they used to be calculated, probably about 4 times higher inflation is, which strips out food, energy, and housing. Since 1980, they've changed the numbers to fit their inflationary agenda. But where do I think it? Where do I think it's going? I don't know where you go to be safe other than precious metals. I try to be objective. I try to poke holes in what I'm thinking. There are very few places that will in a bear market of this magnitude. Let me put it to you this way: he or she who loses least wins. And it's not about, because everyone's going to get their ass handed to them, everyone. And it's not about return on your money, it's about return of it. You're going to see the housing market collapse, you're going to see the bond market collapse. You see, the whole problem, the whole problem, Anthony, as I see it, is that the manipulation of interest rates for all of these years has created tremendous distortions and misallocations in resources and capital, and price discovery. And when you look at the amount of money that has been created, I mean, look at the Federal Reserve's balance sheet since 2008, when it was 800 billion after the great financial crisis, to over 9 trillion here today. All of that was invested in US treasuries and mortgage-backed securities, which all that really did was depress interest rates and incentivize more speculation, incentivize more malinvestment, and blow up asset prices to levels that are unrealistic. So there is a long, long way down. And when you talk about just how far down it is, I mean, the Fed talks about quantitative tightening, where they're going to start to sell off their balance sheet. Well, they promised us they would do 95 billion a month. They've done nothing of the sort. But if they did, at 95 billion a month, it would take nearly 8 years, 7.8 years, to just shrink the Fed balance sheet back to where it was prior to the pandemic. That's still not, I mean, you're talking a long time if you go back to what it was in 2008 at, call it 100 billion a month. So what's that? 10 months would be a year. So you're talking 90 months. 90 months it would take you to go back to where it was in 2008. So look, it's a long time any way you look at it. And that's just the very bare minimum. And that's if the numbers they told us are correct. When you talk about the money that they created over the last 3 years, they printed more money in the last 3 years than the entire history of the country preceding it. So it's created massive distortions. So where do you put your money? Do you put it into real estate when real estate got crazy high and the lowest interest rates in human history? And when rates rise, what is the real value of that property? Do you put it in stocks and bonds, where the bond market is at the tail end of a 30-year bull market, where when I started in this industry in 1990, interest rates were 9%. And now I watched them go all the way down to zero. And now we're climbing back up. But the problem is climbing back up in a highly inflationary environment. People say, well, inflation seems to have peaked. No, inflation hasn't begun to rear its head yet. All the money that has been pumped into the system, most of it found its way into financial assets. And when that money comes out into real goods, you will see price inflation explode again. I think they've tried to manage inflation, certainly by bringing down the price of oil here in the States. At the same time, they've bled our strategic stockpile of oil to its lowest level in 40 years. It's all smoke and mirrors. And I don't think there's a safe place to put your money other than precious metals. I try to be objective. I know I sell precious metals. I know I sound like someone talking his book, but you tell me, where do you put it? Stocks at trading at 25, 30 times price to earnings while paying virtually nothing in dividends. Bonds that are paying right now a negative real return, substantially negative real return, even if you believe the lying CPI numbers from the Fed or from the Bureau of Labor Statistics. Real estate that will invert when rates rise. Where do you put it? You keep it in dollars when the dollar has been getting clobbered with inflation, and keeping it in the bank has no safety whatsoever. And the systemic nature of everything. And now we see a new law being passed where whether it be retirement accounts, BlackRock, money managers, pension funds, there was a law passed, ERISA law, ERISA law in 1974, that basically said all of these managers, pension managers, fund managers, mutual funds, all of them had to invest in a way that was beneficial to the owner of the policy, or of the fund, or to the investors in the fund, I guess I should say. And that's changed. The day before Thanksgiving, they changed that now to focus on environmental and social policies, where maybe we don't want to invest in oil and gas companies because it's not green, or maybe if this company doesn't have enough in the way of minorities and women on the board, well, we're not going to invest with them either, even if it's to the detriment of the shareholders. They just passed this law the day before Thanksgiving. That is, the Labor Department stripped out the word must and replaced it with may in the ERISA law. So things are happening that are just going to lend a tremendous instability in traditional assets. And I don't have to say much about cryptocurrencies right now after watching the carnage that has unfolded, but I do believe you'll see regulation in that industry. And I don't think we need regulation. You can look at Bernie Madoff. Bernie Madoff, made a ton of money screwing everyone, and there was plenty of regulation in the equity market, and the NASDAQ. Regulation wouldn't have stopped FTX. But I think when you talk about cryptocurrencies, they're inherently risky. They are not a store of value, as we have been led to believe. What they are is a speculative investment. They can make you a crap load of money, or you can lose it all. So where do you put your money? You tell me. I think, like I said, he or she who loses least wins. It's about return of your money, not return on it. And I think more and more people across the globe will realize that as things start to unwind. And this is why you have seen the London Metals Exchange in your backyard being bled down to the lowest levels in the 6 major metals that they hold, the lowest levels really in since they started keeping record. And what's interesting about that, it's not just gold and silver. We have seen like a 60 or 70% drawdown in metals like aluminum and zinc, a 90% drawdown in zinc off the London Metals Exchange. And it's interesting that if you look at what China has done since they started stockpiling commodities in 2019, get this, just read this the other day. China, since 2019, currently holds 80% of global copper inventories. That's disappearing off the LME. 70% of corn, 51% of wheat, 46% of soybeans, 70% of crude oil, and over 20% of global aluminum inventory. And yet the LME said that over 65% of all their aluminum stockpile was drained down in 2022. Where do you think it's going? Oh yeah, the BRICS. They're the ones buying it all. And so this is a system that is being dominated by commodities. And when you look at the lowest level of silver ever since they started keeping records on the LME, when you look at 130 million ounces being sold delivered off of COMEX in silver in the last 18 months to the lowest registered level in a very, very long time. There's only 36 million ounces on the registered category of COMEX. Those are the bars available for delivery. And India will import 300 million ounces in 2022, almost 10 times what is backing the global price setting mechanism of the West. We're this close to everything blowing up, where, in one day, a month ago or a month and a half ago, 45% of all the kilo gold bars on COMEX were delivered in one day, just like that, gone. 26 million ounces. Who's got that kind of money? Well, it's interesting when you look at that in the third quarter when all this was happening, over 400 tons of gold was shipped out of the West. Where did it go? It went to the East. And that's double to the central banks. That's double the biggest third quarter on record, nearly, which was 240 metric tons. And now 400 was shipped out. Over 700 metric tons, I believe, for the whole year, which was the most since 1956. So as these nations are accumulating real assets, the people in the West are worried about gender equality and green and all of this stuff, and we're missing the global tide, the sea change of power. And there's an old saying, he or she who has the gold makes the rules. And I can tell you that as we send all of our gold eastward, they're buying up every single ounce they can get. And who produces all of the world's commodities? Just look at gold, the RICS and BRICS, Russia, India, China, South Africa. They're the biggest producers and accumulators of gold in the world. And what happened to gold? Oh, yeah, that's right. They just reclassified it the world's only other tier one reserve asset next to what? Dollars, which are getting their ass handed to them. If you take a look at the pieces that are being put together and the idiocy of our policies and our administration and loop it all together, it doesn't paint a very pretty picture. I don't know where the hell you put your money with any modicum of safety other than what the biggest money in the world is doing, and that is accumulating assets. There's an old saying, Anthony, and that is that assets feed you and liabilities eat you. The wealthy people in the world, they don't have massive bank accounts. Okay, they probably do, but what they have is massive amounts of assets. And it's the assets that you need in an environment where all of the paper derivatives, the forms of wealth that we think make us wealthy, stocks and bonds and currency, are coming under tremendous fire, I think, and will here in 2023.